out N. Chandrasekharan's comment, chairman of Tata Sons, and I think the reporter there made an important point. I mean, the plane went down a heavy residential area. So, I mean, there is, of course, the loss of lives of people on board, but there is also perhaps potentially casualties on the ground as well, since it was a heavily populated area near the airport, basically. Dinshaw is with us. Dinshaw, thanks for waiting. I mean, really a crazy kind of situation. We'll continue to get updates, but let's just get back to the market if we can for a bit. Dinshaw, what have you been doing? What's top of mind for you and your team at Helios?
Well, Prashant, the enormity of this situation is unfathomable. I mean, anyway, let's keep that aside for a while. And yeah, so we've been basically calling out a flattish market. And frankly, I mean, flattish because we've seen all the good news getting already discounted. It's only from here on, probably one more good news is waiting, which is probably the deal that we'll reach with the US. I don't know when, but it'll be purely shortly before 9th of July, hopefully. The fact that China got the deal before us is definitely not good news for us. Wasn't a sweet deal, but I think the 20% fentanyl tax will go away and they'll be at 35. We are already at 26, so I don't know how that will work out. So maybe not as good as everybody expects it to be. So frankly, I mean, the only thing that was supporting the markets is the flows, be it the domestic or the FIIs. The FIIs seem to be waning away because already the valuations are looking a bit stretched at 23, 24 times forward earnings. I'm talking about MSCI now. Yeah, the domestic flows continue, and that's why. And you've seen the supply, which is coming in. It's been truckloads of stocks getting offered. Literally, I was talking to a couple of bankers, and they were like telling us, "Look at the pipeline that we got. We normally see them when markets are looking peakish." So I'll leave it here. I don't think the markets are going to do much, at least in this year.
Dinshaw, do you think the fall that we're seeing today in the markets, this 1.5% lower on the benchmark indices, is just linked? I mean, the sentiment is so down today, given the tragedy. And will it have a lingering impact? And what does it mean for airline stocks, hotels, tourism? Because first it was Kashmir and now this.
No, I don't think this airline, I mean, whatever visual that I've seen thus far, till the end, the pilot was fighting to get the plane up. In fact, if you notice, he was trying to get the nose up even when the plane was literally touching the ground. I'm sure it was an engine issue. I'm sure he must have lost thrust. Some technical issue must have worked out. So I think it was more of a specific aircraft issue rather than airline issue. Obviously, they do have some impact. These kind of big events have some impact, but I don't think it will be a long-lasting one. Having said that, I don't think the market will have a initial phase of dealing with this, but I think going forward, as I said, that mainly it'll be the valuations which will play out. The quarter gone by wasn't that great. The commentary that we heard from managements into the 2 months of this quarter weren't that great either. So I think this quarter also doesn't look that good a quarter. Hopefully, the kind of steps RBI has taken will see some kind of positive uptake, probably in the festive season, which will be the December quarter. And so all hopes are anchored out there. Till then, I think the markets are looking fairly flattish. Time correction is what we are looking at. I mean, that's what we're building in it, actually.
All right, Dinshaw, hi, good afternoon, and good to see you. Dinshaw, the RBI repo rate cut was something that the street was looking at, and that's where they started bidding up, NBFCs, real estate stocks that would be beneficiaries. But that CRR cut suddenly had something in it for the banks as well, because in the longer term, it's good for banks. But in the near term, obviously, you'll have that NIMS pressure. And that's what could swing it towards the banking names as well. In the past, you have mentioned that you like the large private banking names. Continue to hold on to that stance?
Yeah, Nigel, actually, we are doing that only because, I mean, you rightly pointed out the CRR cut was basically a softener for the banks. I mean, a 50 bip cut in interest rates would have taken the NIMS, compressed the NIMS quite a lot. But with that 1% cut on CRR, that gave them a lot of leeway to manage their balance sheet per se. So I think the NIM effect probably will be lasting for a quarter or two for the private sector banks. The public sector, unfortunately, will be longer because they have these longer term loans and stuff like that in the books. And obviously, they have these mark to market and held to maturity portfolio, which will take a hit going forward. So I think that will be a problem there. But NBFCs are a clear winner in this whole game. And that's why you saw the way the NBFCs reacted to this whole thing.
So what have you all been up to, Dinshaw? If you want to just quickly run us through some of the portfolio changes in the last 3 months.
So what we've done is we've basically stuck on to our domestic plays. We've been very clear that we don't want to take any exposure to any stock which is exposed to US per se. Obviously, IT was ruled out much before that also. But the ones which we've moved into are obviously in a big way the NBFC space. We've lapped up on that space. Today, our, I think, financial services, BFSI portion is roughly around 45% of the portfolio. And that's a major overweight in our portfolio. We continue to stick to our names in tourism, hospitality, be it aviation also. And obviously, we like healthcare, but only the hospital part of the healthcare that we're on with, and the new age companies.
Right, then, sure, very quickly, before we let you go, your view on the quick commerce space. Zomato is something that you'll have liked in the past. Now you have Rapido, that's coming in there. It has the fleet of, vehicles. And that's going to be a bit of a challenge, is what the street believes. The Zomato stock, though, has been more or less unmoved, actually. It's been holding steady. And even that MSCI and the FTSE rebalancing, all of that got absorbed. Your view on the space, do you all continue to remain constructive?
So, Nigel, actually, the space is fairly lucrative. I'm sure there'll be others also coming in. Why only Rapido? I'm sure there'll be a few big corporates who will try to walk into that space. But I don't think it's only about logistics. It's not about logistics alone, but I think it's more about fulfillment and stuff like that. And frankly, I mean, Rapido coming in, I don't think is a big deal here. They've already started some marketing in, I think, in Bangalore, if I'm not mistaken. But beyond that, they haven't moved out. So I don't see that to be a competition. But mind you, one big player within that, which was proving to be a big competition and was looking at an IPO, that has fizzled out to an extent. The IPO has fizzled out. They're looking at PE. I think the pressure's taken off. Someone will come in. So I don't see that a problem. But going forward, obviously, it's going to be a 2 or 3 player market. And I don't see a Zomato, at least eternal, by the way, as getting affected with this kind of a competition.
Absolutely. Dinshaw, thank you very much for joining us. And as always, good getting that